All right. Ezekiel Butterthighs here, folks. And it is July 25th. We are at the open, 9:30 right now. Let's get it started. All right. Let's try this again. Ezekiel Butterthighs here. It is July 25th. We are ready to do some trading, folks. All right, what do we got? All right, we had a big day yesterday. All the big averages were down quite a bit. QQQ in particular. Now, I tend to think that we are still in a bull market. There's no reason to really think we aren't, other than, recent price action, which, let's take a look here. Whoa, look at that. That's what we've been doing the last few days. This is the 6-month chart. Yeah, that's pretty ugly. So, what happened yesterday? Let's take a look here. So, yesterday was a big down day. It was a Wednesday, and we had a serious drop in the prices. Yeah, so why did it happen? Well, the pundits and everybody you see online and you see on CNBC in particular, they like to tell you that it was because earnings were bad yesterday, right? Yeah, all right, that's a good excuse. You got to understand, whenever there's an up day or a down day or an in the middle day, CNBC and the people who analyze the market, they always find a reason, all right? They always have to give you some sort of explanation or excuse or, something to show off their knowledge of the market. The fact is that 90% of the time it's just BS, all right? So what really moves the markets? I'm going to tell you what really moves the markets. The algos move the markets, all right? Algos are 85, 90% of the trading that occurs in the market. So the real reason the market went down yesterday is the algos wanted to take it down yesterday, all right? Prices have just gotten too inflated, and there is a natural wave-like motion to markets, all right? They go up, they go down, they go up, they go down, they move in a wave. That has to do with people's psychology. So when things get too hot, like they were up here, things go down. When things get too cool, like they're approaching right now, they tend to go up. You know, there's always a reversion to mean, all right? That means that prices tend to gravitate towards the center, all right? So if the market goes up very, very quickly, it's going to come back down to come back to the average of the last few days, all right? And if it goes down very, very quickly, it's going to come back up, to come back to the average of the last few days, all right? So that is basically all that's been happening. Yes, there's been a rotation out of the big Magnificent Seven, the big tech names. There's been a rotation into the small cap names. So QQQ has been punished and IWM has done well. But the reason for that, there's not any real reason other than, I mean, you can make an argument about inflation, but the real reason is that QQQ has been so hot. All right, look at QQQ. Look at what it's done. It's gone from 410 to 500. It's gone up 20% in the last 3 months, all right? And what did IWM do in that same time? The small cap. This is the Russell, IWM is the Russell Small Cap Index. During that same time period, IWM was flat the entire time, all right? So you have this disparity where the big tech names have been making this huge run and the small cap names have stayed flat. So yes, we're getting a rotation out of big tech into the small cap names, mainly just because QQQ had been going straight up, and there's a reversion to mean, all right? What goes up must come down, and what goes down must come up. So the money has been flowing from the super hot stocks into the stocks that were ice cold. That's what's been happening lately, all right? Now, as that's been happening, the market has gone down quite a bit. We are down. SPY, the broadest index, index of all stocks, the 500 largest stocks in the market, has gone from 565 to 540 today, all right? So that's 25 points. That's a 5% drop in just a couple of weeks. Yes, that is quite a drop,
I'm here for the gangbang.
Oh yeah, SPY has been getting it quite a bit. All right. So what do we think is going to happen now? I think we've got some good opportunities coming up, actually. Yeah, we've got some good opportunities here. It's going to be a little tricky, as always, but there might be a chance to make some money over the next few days. Not exactly today, but over the next few days. I'm actually pretty happy with where the market is at in terms of having an opportunity to make money right now.
I like it!
Oh yeah, I do. Oh yeah, I do. All right. So, now, let's see here. So, that's what happened yesterday, all right? Basically, we've been too hot, too inflated. It had to come down, specifically QQQ and big tech. This is just the natural order of things. There doesn't need to be an explanation. There doesn't need to be some reason. You don't need to read articles about it, you know? Things were overbought And now they've come back down because that's what happens. Let's bring up our RSI. I really wish Thinkorswim would save my RSI. RSI is the relative strength index right here, all right? This is a measure of overbought or oversold conditions. It basically just averages the prices over whatever time period. In this case, my chart is 6 months. So it takes an average of the recent prices and tells you where today's price is in relation to the average prices of the last few days. So when this move started, we were up here. RSI was up here at around 80, which is about as high as it goes, all right? Once you reach 80, you can see on the chart here, once you reach 80, you basically always sell off, all right? So, yeah, you can't really stay at 80 without it selling off. That means you're way above recent average prices. Always going to be a reversion to mean. Now, today we are at 40, which is getting pretty low, all right? It's not as extreme as 80. I mean, if we were down at 20 RSI, that would be, again, about as low as the RSI goes. And honestly, in this bull market, I don't think we've seen a 20 RSI in, I mean, I don't know. It's been a very, very long time since we've seen a 20. Yeah. So, yeah. So, let's see here. RSI is down at 40. It can go lower than that. Could go lower than that. All right. So, big down day yesterday. Why did it happen? CNBC, the pundits, who are always wrong, they always try and bullshit you. Ezekiel Butterthighs, I don't bullshit you, all right? I'm telling you like it is, giving it to you straight, telling you how to make money, all right? Yeah. So they'll give you their excuses. Oh, earnings were bad, blah, 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 blah. No, it was just the market was overheated. It needed to come down. The algos knew it. And quite honestly, there were probably a lot of people buying calls and being bullish. And when that happens, the algos know it's time to make money, all right? Algos are always fighting us retail traders, all right? So when things get super hot, normal traders tend to think, oh, things are so hot, I'm going to buy, which is actually the exact opposite of what you should do. But that's just human emotions, all right? So the algos will always try and screw you. And that means when things get hot, they're going to sell on you, all right? That happens over the course of any time period, honestly, whether it's 5 minutes or intraday or 3 days or 5 years, all right? The algos always manage to find the moment when people are so bullish that everybody's buying, that's when they sell, and vice versa. They find the moment when everybody is so bearish, and that's when they start buying, all right? The algos are actually, I mean, they're machines, but they are masters of reading human emotions and knowing where the market is at, knowing whether retail traders are buying or selling, and trying to screw retail traders. That is the market, folks. CNBC, everybody else, the tipsters, the hucksters, the analysts, the hedge fund managers, they never talk about it. Nobody ever says it. They always want to talk about fundamentals and earnings and this and inflation and the Fed. And these things matter to a certain extent, but to a trader, day to day, trading in and out, what matters is what the algos are doing, what the algos are thinking, where the algos are going to be the next day. And if you want to win, you have to beat the algos, all right? And you have to understand how the algos work. The algos are trying to screw retail traders. That's their job. That's what they do. They're trying to take money off of people like me and you, and they're very, very good at it, all right? They're remarkably good at it, all right? So if you want to beat them, start thinking like them, start trying to beat them. That is the chess game. That's what trading is, all right? Trading is a chess game versus the algorithms, all right? It's not figuring out what the hottest stock is. It's not figuring out who's got the best earnings. It's not figuring out AI is the future of the entire universe. Trading, mind you, if you're investing long term, buy and hold, you know, if you're investing to retire, you know, earnings and inflation and all of the stuff CNBC and hedge fund managers, all that stuff that they talk about is important if you are an investor, all right? But if you are a trader, that stuff just doesn't matter on a day in, day out basis. What matters is what the algos are going to do. And the algos are going to do whatever is the algos are going to move the market in such a way to screw over the maximum amount of retail traders and take the most money they can off them, all right? Again, it's a zero-sum game. It's a competition. It's not all that different than a poker table, okay? And you're sitting at that poker table with, it's you, it's one other human on the other side of the table, and then there's 7 or 8 algos also at the table. You have to be able to beat those algos, okay? So, that's what yesterday was. Algos decided, you know what? We're going to take some huge chunks of money off people. And they did. All right. Good job, algos. Congratulations. Yes. Don't we all love the algos?
Jerk off!
Yeah, that's what I think about the algos.
Jerk off!
And you know what I think about CNBC, and that they never talk about the algos, and they pretend like the algos don't exist?
Jerk off!
Yeah. How about you guys actually talk about the algos instead of earnings and, you know, which stock which sectors are hot right now? Does that matter to us traders?
Shut your fucking face.
Yeah. Let's stick to what matters. And that's what the algos are doing, and what Wall Street is doing, and how they're trying to screw us. All right.
Oh yeah.
That's the way it works. All right. Now. All right. So. I don't have any open positions today. What are we gonna do? All right, so this is what happened yesterday. Algos tried to take your money. All right. Here's Ezekiel's thoughts for how we're going to make money. All right. And I wish my camera would focus on me. Going to have to do something about that. Yeah, stay focused on me, camera, please. Anyway, yes. Ezekiel Butterthighs thoughts. It's a bull market, all right? We are still in a bull market here. It's a secular bull market, which just means it's a bull market that has lasted for a very, very long time. And we are still in it, all right? It's not going anywhere. This bull market is not going anywhere. Will it end eventually? Yes. Do we think that it's ending today? No, not yet. So we still have to work under the assumption that we are in a bull market. I'm gonna have to get a program that can focus this mouse because it's really annoying me. Really freaking annoying me right now. Yeah, it's pissing me off quite a bit.
It vexes me. I'm terribly vexed.
Yeah, I'm terribly vexed about this camera not focusing. Yeah. So, our plan for today. Skip this part. That's yesterday. All right. Ezekiel Butterthighs thoughts for today. We are still in a bull market, so one of the lessons is when you are in a bull market, you want to take long positions. You want to buy calls, not puts. Sounds simple, right? It is simple. When you're in a bear market, you want to buy puts and you want to be short. All right. It sounds simple, and it is. It's very straightforward, but it's easier said than done. So we are in a long-term, what you would call a secular bull market right now. So generally, if you're going to make any plays, you want it to be calls, all right? You want calls, not puts. Yeah. Now, in the short term, right now, I mean, we are in a down move right now. At this particular moment, the market has been going down. There is no doubt about that, all right? So, you know, I can understand people wanting to get short because the market has been doing this lately. Yeah. But, you know, let's zoom out a little bit here and see what the chart really looks like. I mean, this is a 3-year chart, all right? 3 years. I mean, this is what we've been doing since the beginning of 2023. So the past year and a half, we've basically been going straight up. Let's just assume, for the sake of argument, and because it's logical and it makes sense, that we are still in that bull market, that it has not ended, all right? So if we are in a bull market, you generally want to buy calls. Stay away from short plays. I could get more in depth on that, and I can understand the pull of wanting to get short here, but I just don't think that's the right play. Mind you, I actually think that tomorrow, not today, but tomorrow could get very, very ugly. In fact, you know, I'm sitting here telling you that in bull markets you should be long. I'm actually very tempted to buy puts, not right now, but for tomorrow. Friday, all right? Fridays tend to be active days because options are expiring, okay? Options are expiring. The market just tends to have a lot of action on Friday as the options come to fruition, all right? So you tend to get movement. Usually that movement is a reversion to mean. Usually that movement would be, in a case like today and this market, it would be an up move, right? On Friday, the options sellers and the algos, they don't want to pay off people who have been buying puts all week, and I'm sure there's a lot more put buyers than call buyers right now. That's just human psychology. On a Friday when the options expire, the option sellers, Wall Street, they're not going to want to pay you, all right? So on a Friday, you tend to get a reversion to mean, which, like I said, since we're down quite a bit this week, usually we would tend to go up on a Friday, all right, to bring us back and make sure the options sellers don't have to pay people off. Need to relax. I need to relax for a second. Sorry, guys. Though that's not always true. On Fridays you do get action, but you don't always get a reversion to mean. Sometimes you get the exact opposite, all right? There's no hard and fast rule. I happen to think that tomorrow we may get a big sell-off. I think today you're not going to see a ton of action, all right? That's what I would say about today. You're not seeing a ton of action right now. You've got QQQ down 3 points, but you've got IWM. Let me go to my intraday chart here. There we go. You've got QQQ down 3 points. You've got IWM up 2 points. And you've got SPY down 1 point, which is basically nothing. So there's not a lot of action today right now. And I mean, there was so much action yesterday. If we were going to get a big move today, you'd be seeing that action already, all right? And we're not seeing it, so I don't think there's going to be a big move today. That could change. An event could happen. A Fed speaker could say something. You know, Russia could decide that they are done invading Ukraine, and, you know, so things can happen. But the way this day is shaping up, it doesn't look like there's going to be a huge move today. It looks like it's going to be a classic whipsaw day, all right, where we go up, down, up, down, up, down, and the algos just bust you, okay? The algos love whipsaw days. Yes, they do. That's where they make their money. They go up, up, up. They get people to buy calls, and then they go straight down, down, down. They get people to buy puts, and then they go up, 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 and algos make a lot of money on whipsaw days. Days where the market just goes up, down, up, down, up, down, but doesn't really move in any direction, all right? This looks like it might be a whipsaw day. Maybe. That would be my best guess, you know. Plus, there is a tendency for the market to seesaw on opposing day, on consecutive days, all right? In other words, if the market has a big down day, the next day the market tends to go up. And if the market has a big up day, the next day the market tends to go down. It's, again, that's the algos catching people, all right? That's what the algos do, they catch you. So if you have a big, big up day and you know people are buying calls, because that's what they do when the market goes up, 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 the algos will go down the next day to punish those people who, you know, were making a very simplistic and not very well thought out trade, right? Now, we wouldn't do that, right? Yeah. If the market goes up, 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 the next day the market will probably go down. So, you know, we're not going to be buyers when the market goes up, up, up. And like yesterday, when the market went down, 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 we don't want to be put buyers when it's going down, 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 down. All right? That is exactly what the algos and Wall Street want you to do.
A man as smart as you has probably considered this. A man as smart as you probably has a plan.
Yes, men as smart as us will not do that. We will not feed the algos. Do not be a feeder. All right? We are not feeders. No feeders here, all right? No feeders in Ezekiel Butterthighs channel. We don't feed the algos. So, what did my slide say? My slide said, yes, so our bottom, we want, our play right now is to catch a bounce, all right? We're in a long-term bull market. That's on our side. If we're buying calls and we're going to be long, the long-term bull market is on our side. We want that bull market on our side, all right? That's why, even though this market is shitty right now, I don't want to be buying puts. I don't want to get short. Although I think I could make some like small profits, make some short-term money buying puts here, because I do think the market is going to continue to go down short-term. But I wouldn't be confident in the play. I wouldn't know exactly where to exit, and I wouldn't have the long-term trend on my side. I want the long-term trend on my side. So even though you might be able to make some pocket change, some pennies, getting short here and buying puts, you know, you might even be able to catch 10 points, because look, the down move, this down move doesn't feel over yet. And I think SPY is going to bottom at 540 or at 530, all right? Then it will bounce. Levels are important. Levels matter. They just, psychologically, I don't know, whatever reason, round numbers, ceilings and resistances that have been ceiling and resistances in the past, they are important, all right? 540 is a level, all right? Now, I thought we might bounce off of 540, but it does not look like that is happening right now, okay, right? So no, look, were we going to bounce off of 540? It looked like maybe we would, but no, we're going past 540, we're going down. So if we're not going to bounce off 540, I really do think we're going to bounce off of 530, all right? Let's look at the chart here. You can see 530 is right here, all right? That's a level. That's an important level. Now 540 right here is also a level, right? But if we were going to bounce off of 540, it would be happening right now. We're not, bounces happen quickly, all right? Yeah. When the market goes down, 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 down moves tend to start slowly and accelerate, all right? So down moves go, whoa, and then vroom, into a capitulation, all right? Down moves end with a sharp, fast capitulation move, a really big, a really big, fast down move. We haven't seen that capitulation, all right? Was yesterday a capitulation? It might have been. It looked like it could have been. I mean, it was a huge down move, but it didn't look like panic selling, all right? And panic selling is what you want to see for a bottom, for a capitulation bottom. And I didn't see panic selling yesterday. So, yeah. Did we hit the 540 level on a very big down move? Yeah. Could that 540 level be the bottom? I definitely thought it could be, but it's not happening. We're not bouncing. I mean, it still could be. Nothing's ever too certain in markets, but I mean, 538. If 540 was the bottom, I'd really want to see a nice bounce here today, and it's not happening. So I really think at this point 530 is going to be the bottom, all right? Now, so be patient, all right? Let's be patient here. Let's wait for the sharp and fast bounce off of 540 or 530 and then get in heavy long, all right? Now, we want the capitulation down move into a level, a big fast down move, and then we want a nice fast bounce just as quickly, all right? That it almost always marks the bottom of a correction, all right? You get a V shape, all right? The V shape, all right? The classic V, all right? So we want to get in long here, we want a V shape. And that's a good money-making opportunity, all right? Now, 540 or 530, we might have gotten that V shape. Right now, we are blowing past 540 without the V shape, all right? I don't see the V here at 540, all right? I'm not seeing any V shape forming. So let's be patient. Let's wait for our moment. Wait for our capitulation down move. Right now it looks like it'll be into 530. If we can get a sharp capitulation into 530, we should get a nice V bounce off of that and make some money when we get long there, all right? That's the plan. Be patient. Wait for the capitulation down move, then get long. I think our target is 530. Yeah. If you want to mess around, you know, I think we're still going down here. I mean, if I had to pick today whether I wanted to be long or short, I definitely want to be short. I mean, if you just need action, which is a terrible, terrible idea. If you need action, you should be doing something else, right? So,
Thanks, Dad.
Dennis.
yeah, so if you need action, I think you should be doing something else. But is it the worst idea in the world? Getting short here? No, I don't think it's the worst idea in the world. Because I think, honestly, I think at this point, we are going to go down to 530. I think it's going to happen very quickly and very sharp, and then we're going to get our bounce. I'm just much, much more comfortable waiting for the bottom and then buying into the bottom, but getting long into the bottom because we are in a bull market. If you go short here, you're really going to be out there on a limb, kind of uncertain, working against the longer term trend, and you know, you're not going to really know where your exit is. I mean, you could get short and say 530 is my exit. Yeah, all right, maybe. I would not say that's a terrible play, but again, it's hard to feel confident in buying puts in a short play in a bull market. I would rather wait for a bottom and get long and have the confidence that the market is on my side, all right? That's what I'm gonna say. So the plan here, wait for a capitulation down move into 530, start getting long there, look for that V bounce, and that's where we're gonna make some money, all right? So, yeah, good luck with that. I think that's a great plan, honestly.
Number one rule of Wall Street. Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is gonna go up, down, sideways, or in fucking circles. Least of all stockbrokers.
That's right. Who knows? That's the plan, folks. All right, wait for 530, get long there. Good luck. I mean, I think we're gonna.
I can't wait because you will fail.
Fuck. No, we won't. This is gonna work. All right. That's Ezekiel Butterthighs' advice for you today. Wait for the capitulation. Wait for the bottom, which is probably going to be 530. Then catch that bounce, all right? Don't try and catch this down move. If you want to, you want to. You want to try and ride it down to 530. Maybe it's not the worst idea in the world, but you know, you need patience, you need discipline, and yeah, that's my plan. Wait for the bottom, crush it once we bottom. All right. Good luck, guys. We can do this, all right? We're going to beat those algos. We're going to beat Wall Street. Just requires a little patience and a little risk management. I don't think today is the day. I think tomorrow could definitely be the day where we catch a nice move. All right. So, Ezekiel Butterthighs signing out.
I'll be back.